All right, can you hear me now? I think I fixed it. All right, cool. Yeah, it's because my AirPods were freaking open, dude. My case is open, so it was like picking that up. All right. What do you mean no? No to what? Oh, never mind. I thought wait, y'all can hear me though for sure now. All right, we're just chilling today. Y'all can just ask me anything. Whatever. I can go over some price action, some trades I took last week if y'all want. Is there a timer on this? Is there live stream or is there live trading? No, not necessarily. That's probably something I'm gonna do next year though. I think I've only live traded like twice on here. That's a crazy question. All right, I'm gonna go over what did I take Friday? Okay, I took RTY. I'm gonna show y'all why I took this. So if you guys know my little model here, you know it's based off of IPTA and the phase of price and then power of three rate or open high low close, whatever you can call it. So we have a clear expansion into lows. So when we expand into lows is when we get a new phase of price. Okay. And we fell short of this low as well. So what phase of price do we get? Consolidation, right? If this is going to be manipulation here, right, we wouldn't have this delivery away from this low like this. It would be more aggressive, right? It's very lackluster. It's just two inside bars in between one candle. So I'm viewing this as consolidation at this point. So when we purge this high into this fair value gap, right, I'm more so thinking manipulation to then trade away from this. And then you have failure swings on the opposing side of that. So when I drop down to the lower time frame, all I'm doing is looking for this candle the next day to be an open high low close, small opposing run to support expansion. Right, simple. Um, when I open the charts around 8 o'clock here, I see we formed a reversal, you could say. Right, this opposing candle, that's cool. But there's no established high to trade away from at this point. Like if I go here, I'm not gonna trust this little opposing candle, right? That doesn't I don't really trade like that. I'm not gonna trust this. I'm gonna wait for a manipulation to trade away from. That's how kind of how I trade. So the relevant time for that to happen is 9:30, right? So when 9:30 makes the opposing run to your draw, and then we close over that, right? So with SMT as well, um, this is like the ideal scenario, right? And you see, we just once you see that, like it's going to distribute with speed, right? This points this point, we haven't really created the daily range very large. It's a small range. So when you see this, it's going to be heavy. It should be heavy. When we haven't even expanded at all necessarily. And I'm entering around the manipulation, right? So this is where I can be really aggressive, right? We have 10 a.m. open. If 9:30 manipulates, then 10 a.m. will distribute, right? And I'm entering around basically this 15-minute candle here. I don't expect a large retracement at 10 a.m. That'd be an invalidation, right? Because we literally just manipulated. I know it's going to be very aggressive to this low. And then once you see price fail to even displace this low, is when you can be extremely aggressive with your entries because price should expand speed to these lows here. Then once we take out lows, we can have some sort of pause, which is what we do, or retrace. Um, but once you see price fail to manipulate this low and then form some sort of continuation signature, you go to the next low right down there. but I took my full position off here, around here, a little bit past it. Does that make sense to everybody? Yep. It wasn't even a fractal model though. Well, it actually technically was, actually, yeah, it was. Thinking of something else. I know, it's like a glitch, Diego, I don't know why it does that. Your USD? I think I looked at it once, last week, and it was just so choppy. Forex during holidays is, like, just the worst, I feel like. Yeah, like, there's nothing to review here, I'm not gonna lie. Like, I'm looking at this high here, you're just ranging pretty much. So if you can manipulate this low or this high, maybe take it here. Yeah, it's nothing to really go over though. Last week didn't really do anything. Just literally ranged. You look at the weekly candle, it's gonna be a decision candle. Nothing to really look up. But um there were some really good trades, really good days on indices. I got traded ES, I think. These days. Yeah, I traded ES this day. So if I go to the daily chart, again, expansion into a low. Then we're just seeing how we react to this low. What phase of price we're gonna get. Via consolidation, meaning price is not going to reverse from this swing point and take out the swing point. Then we're going to reassess again. Then you see obviously manipulation rate. So if there's going to be a manipulation, it's going to expand, right? Unlike RTY, where we just consolidated on ES, we have these more so expansion days, right? Um, so that's what I'm looking for, just continuation. We have Friday manipulation, Monday, Tuesday expansion, and then it's just about finding the low of the day here, trade away from an established low. So if the previous day closed an expansion candle, we want to see price ideally create the wick of this candle in the upper half of this range, but you're going to see how this forms. Um, so we have a manipulation near that area, which is fine. And what's good here is what time this manipulation occurred. So if you use the daily profile, this is pretty much textbook where we have A's session highs, just session highs. It's good, right? No established high. Um, and we have manipulation creating the low today, just like we did on RTY. This is exactly what I look for. I don't trade anything other than this. Hourly manipulation creating the daily wick, the daily low to then catch the expansion. One thing to know about this here though, is because this opposing run is rather large, you need to adjust your targets. You can't really expect price to expand way up here because the way the daily candle is developing doesn't really support that. You gotta have to adjust your target. So this is fine, right? This manipulation to this high. Um, so when you see 930, you match a manipulation with a driver. So 930 makes the opposing run this low. That's even better, right? And then you can use an SMT. You can also use the 4-hour logic, right? Within this 6 a.m. time interval, you have all the drivers mainly. You have like 8:30 news, you have 9:30, all those news drivers. So this candle here, when it prints the reversal, I want to say 10 a.m. distribution, and I am viewing the same logic of expansion candle where we have this small opposing run, mark out the 0.5 this range. I want to see an open low first, into some sort of PD ray creating inside this candle, then catch the low of this candle, and then the expansion. And ideally, you want to end around the opening prices of these candles. So if I go here, the 15-minute time frame, we open up this candle right here. On the 15-minute, there's really nothing to create that low in, but when you drop down, there is a clear opposing candle. You want to see the 0.5 of this candle support price. Any deep retracement is an invalidation, right? Notice what we do first. We open low first. That's exactly what we want to see. I got to the charts really late because this is the day after Christmas, so I didn't really expect to look at the charts, but I'm not gonna lie, I think Ghost, I don't know if he's in here. Ghost, we got yeah, Ghost is in here. Uh, he like pinged me in the chats about some question. I was like, okay, let me just look at the charts. And I saw this, so I was like, yeah, it's pretty clean. So I took a trade here. Everything is aligned, like it's perfect, but yeah, you have this little consolidation up here. But it's all the same thing, right? You look at the RTY trade you showed you that I took on Friday. I'm also gonna show you guys these two samples on YM. Like honestly, back to back, all three of these days are fire as shit. But this is a bit different where we don't have the manipulation at the high of the day, but the what the previous day did is important, right? It took out all these highs. So I don't really need to see, if we validate this opposing candle, I don't need to see some manipulation at the high of the day. I'm just trading away from manipulation. Like that's the key, really. Which was this 930 manipulation, right? But if I go to YM here, I didn't trade any of these days. Like what days are these? This is 26th, 24th, but these are all green days. I'm gonna show you. So if I take you the daily chart again, all relatively the same framework where all the indices take out this low, and then you have Monday kind of ranging, but the weekly candle, right? It opens low first, and then it closes really weak, the long wick. So if you look internally to this wick, and just on the intermediate time frame in general, you have a manipulation and an expansion, right? And then you retrace, and then what we do the kind of late in the session is kind of have this reversal, right? We have a opposing candle created from the EQ of this range. So if this is expansion, if the previous day expands ever, and the previous two sessions the next day kind of consolidate, this is like ideal because this is a continuation signature where if we expand the previous day, open up around here, then price either retraces, leaving failure swing, because we know that price isn't reverse from failure swings, or it just consolidates, and then we manipulate the daily range with like some SMT. This is always ideal to then expand. That's what we see here, right? We just manipulate, or sorry, we consolidate, we manipulate at a key time, 9:30. Again, always um, match your manipulations with the driver SMTs. That's what we have here. Uh, and yeah, it's pretty clear. So you have 9:30 making that closing run. I traded something else on this day. I forgot. Was it yes I showed you? Oh yeah, this was also clean. And then you have this objective, right? This daily swing point. And then this day closes, right? And then what phase of price do we get? Because once we expand, like this, we expand, new phase of price. Again, the previous two sessions really just consolidate, and then we make an opposing run in London. So we consolidate, make an opposing run in London, um, using that same logic of 4-hour candles. You have a key level here, just a range from high to low, and then we form a reversal in 6 a.m. candle. Um, but you can get onside early with that. So here again, manipulation below the day, using the hourly time frame, just as my filter, hourly swing point, SMT with the correlated asset, which is RTY right here. And so we have 8:30 news this day. So 8:30 makes the manipulation. So again, a driver make the opposing uh, run to the draw. And then once you have a double driver, if the first one manipulates, the confirmation to this is obviously close through that, but it's also when the driver expands away from the manipulation. That's your confirmation right there. That's what it does, as you see here. It actually validates the order block, so this could be a potential entry here. But yeah, let's keep playing. But that was indices for the most parts here. Um, I could look at, I don't know if gold did anything. Uh, all right. What do you need to see on lower time frame? Or what do you need to see on lower time? To take entry? especially in terms of low resistance manipulation. The idea is what would be validation? Oh, yeah, it's always this. So you're always gonna have an invalidation. So if like the previous candle reversed, for example, here, this it can be applied to any candle. So we have a clear reversal on 6 a.m. candle. So here on the 50-minute time frame, what you're gonna do really is you're gonna mark out 0.5 of this candle, right? And the whole logic behind this, marking out the previous candle, is you don't want to see a deep retracement, 'cause that would then create a large opposing run, right? And after manipulation, we don't really retrace very far. Like you don't want to see that as invalidation because you want to expand with like speed. So when I drop down to 5 minute, you can really just simple as this, right? This opposing candle. If price comes and takes out this opposing candle, then that would just totally invalidate it, right? This would just be like more so like choppy and consolidation. Because in an expansion, we respect opposing candles. This is a really large opposing candle, very large range. So yeah, this is a really good candle that you want to see the low of the 10 a.m. candle open. So it opens right here. You want to see this respect price, right? Here, we just consolidate, right? And then we sweep out this low. Now it's really this candle that you want to see. This would be like my 10 a.m. low confirmed. It was this, then it moves to this. Essentially, I don't really care about if this closed here. I don't really care about this. It gets you with this low. But yeah, you see that wick? Right, that's about as good um, opposing run that you want to see, and we respect it there to get to this high. And then once price gets this high, it can do whatever it wants. It can chop. I don't really care. My main focus is trading this manipulation, this high, and then I don't like to enter after this. I can manage it for hold runners and stuff, but I don't really like to manage it. And there's another concept for continuation, but I'm not going to get into that because it's more of a E-Trades lens thing. But within like a 4-hour expansion candle, you're gonna have 1-hour expansion candles, and you want to enter on those opens. But there's a way, to like really good way to confirm those continuations. Uh, how would you approach NQ Friday expansion? I wouldn't. That's the thing. Um, like I have a very specific approach, and this just doesn't call for my like the narrative is okay. We have a Monday low. Um, a key level here. You don't really want to, and you see this Thursday manipulation. Probably going to trade back to Monday's low, back in the range, but I can't really. I mean, you have this opposing candle, you could say, but I just don't like trading away from failure swings. Like, there's nothing in this range here. I mean, maybe you could say this, right? But once we validate this, but prices kind of runs. Like, I trade it around 9:30, and it's just down here. Like I can't do anything with that. Let me see if there's any SMT. We have this little SMT here. Right, on this key level, but yeah, there's just I don't enter at these times, so there's nothing for me to trade here. But it was all right. Definitely a really nice expansion day, but I couldn't find myself getting in on side with that. This day as well, I traded this day, but it was Monday, I think. Yeah, Monday I traded this day. But the thing about this day, I actually traded short to this low. It was like a small trade. It was like 125 R. I just wanted to hit a trading day on top step, honestly. But if you look at this day, again, what did the previous day do? It expanded, right? And what did the previous 2 sessions do? It consolidated. So this is a continuation signature. So I'm already long biased, but we had an S&P previously, like right here, with this low, right? So if I look at the low today, it's really just a session, and we have this S&P, right? But when I see 9:30, like I said, if there's a manipulation prior to 9:30, then what should 9:30 do? It should expand. But what does it do? It takes it this high, and then fails to displace through it with an SMT. So at this point, I'm just thinking that we're going to take out this low at this point. So that's what I targeted, right? Um, just off the failure to displace here. And at this point, I don't like to trade 10 a.m. really reversals too much. And here's the reason why I didn't trade this one. If you look at the 4-hour candle, look how large this opposing run is. Very large. So I'm not even trading within a expansion candle. Like 4 hours. So, like when the drivers don't really make the low of the day, which is what you want to see. I don't know if we had A3. No, we did. Then it's just like kind of uninteresting to me. And I already hit profit for the day. It's like December, so I didn't really mess with it. But as far as the logic goes, the reversal here is the only logical place to look if you're going to be bullish. And there's also no SMT here, so that's another reason why. There's lower time from SMT though, like right here. You get this opposing candle, but nothing like too good. I think AB took that. Yep. Sure. No sound. Is there no sound, guys? These chits tripping. Can I speak on risk management? Sure. Let me go back to like one of my trades here. Let me just find an example of like, just say a CSD. Okay. All right. Let's say you guys enter something. This is how I personally manage it, at least. Let's say you want to enter off of this fair value gap. All right. Let me point stop up here. Let's say you want to enter off this fair value gap, right? As soon as we close, that's how I personally manage. As soon as we close above this or below this, I move my stop loss to here basically to break even. Because again, there's really no reason. Let me before I play. There's really absolutely no reason for price to come back up here. If it does, I don't want to be involved with this chop. There's no reason to risk this trade. So I'm pretty aggressive with the way I manage. Um, and I also just risk like 0.5%. So I risk a lot of people risk like maybe like $200 on a 50K account or something. I risk, $300 to $400. So that's why I'm kind of more maybe more conservative, I guess you could say. Um, and I'm also trading a mini, so like I can't really partial either. So if only 3 minutes is a lot more clean, and then you can trail as well. So, but this is like you can only trail when there's new invalidation. So you see how we entered here, like your new invalidation is this high, but you can trail to it because we closed below the opposing candle. But it has to be like a stablet. Like I'm not going to use this. Yeah, sure, it is a propulsion block, but I'm not going to trail to here. I will trail to here though, right, to like a actual high and stuff. I'll trail to there. But this is not really a high that I really trust. Like it could easily just sweep this out and go. I'll try to find a better example though. Because I enter after manipulation, so price should really run, in an aggressive way. So that's probably why I can get away with it. So here, if I'm playing on this fair value gap, let's say, I always put my stop loss usually at the body. Um, if I enter this and then we close below here, I can just trim my stop loss to here. And then once we start to really trade away from here, then I can just go break even, right? Uh, and then that would be like depends on what you're targeting at this point. This is just an example though. But yeah, it looks something like that. Um, another example. Maybe I go on the lower time frame. Okay, let's say you interrupt this opposing candle. We just whatever, like we manipulate something or whatever. So you want to target these lows. Mark execute there. Now at this point, I'm putting my stop loss in this area. There's no reason to put it up here because again, like we're not going to retrace all the way up here and then leave failure swings. That's another thing where like you can actually, make your stop loss a lot smaller, get better RR. Um, at this point, it's a bit weird because I can really only trail when we close below this because I can't really trail to break even at this point because we haven't formed an opposing candle. New invalidation may still come up here, right? Um, when we start to really trade away, like this next candle here, like right here, is we can go break even. Because like again, I don't want to see a deep retracement, right? And we also have, I guess you could say, this opposing candle. That's kind of how I view it, though. I just trail with new invalidation. Say you're going to enter this, for example. Maybe this opposing candle. I put my stop loss to the body. As soon as we close below here, I'm putting my stop loss to here at least, right? And then once we, create a new one, it's just about protecting your entry. Um, really, that's how you need to think of it. You don't really want to be. I know some people don't go break even. They just like despise it. I'm not really sure why, but yeah, you want to protect your entry, bro. There's plenty of opportunities. I know a lot of people are scared to go break even. It's gonna, take them out and then go to TP. But that's just a part of it. You know, that it is like the worst feeling. I'm not gonna lie when that happens, but it's just kind of something you have to live with. Like this is how distribution should look. I remember this day. We have this model here, same model we use, right? Where 6 a.m. hits this high, and then with the SMT, so we expect 10 a.m. to expand. When you look at the opposing side of this manipulation, we have session lows. This is a textbook entry. I want to see price really expand, right? We have 930 manipulation as well. So like this is when I can literally drop to the 3 minute, the one like I can enter really lower time frame here. Because this is the only place for the low of the day, high of the day to form, right? And it's just the narrative, um, aligns and everything. And I'm trading after the 10 a.m. open. Not why am I not trading as soon as we hit this high, right? Because of the way this candle is forming, right? Look how like, this is basically an expansion candle to the upside. It cannot be an expansion candle to the downside, which is I only want to trade expansion candles to my direction, right? Towards my draw. So this right here is the complete opposite of that. So I would want to trade the next candle because this candle would have the opportunity to create that small opposing run and then expansion, right? And I also don't want to catch the reversal. I don't want to like, really chase the reversal. Here, the reversal already formed. Right, we have 930 opposing run. We have S&P here as well. So I can just enter after this, right? Um, and again, you're not going to wait for this opposing candle. Not going to do that. When you think about um, the the phase of price and just the manipulation or the reversal signature, it is expansion into a key level and then expansion away, which is what you see here, right? This is expansion because we are essentially creating new highs, right? We're not really making deep runs and respecting order flow. Um, so we're disrespecting opposing PD rays, and then we are also respecting new ones, right? And I've already went over this a couple times, but when there's a when the opposing not opposing, working the CSD for the manipulation leg is really far away, you're gonna wait for essentially inverse fair value gap. It's the only thing you can refer to. But basically, the first failure swing to print, first relevant failure swing to print, you're gonna refer to this to support price because when this forms between the reversal point and the first pullback, you don't want to see price come back and sweep this, right? Because right, we don't do this after manipulation. We don't make these um, deep retracements. We want to see opposing candles support price. So you're gonna refer to that first relevant failure swing, like basically the first set of a bulky candle here. Aren't really gonna refer to this one to be honest. Not really relevant. Um, Here we inverse the fair value gap anyways, and it gets created in there. So this is what you want to refer to. Let's say you entered here, something like that. And I barely point stop loss here. Always gonna be like at the body, maybe at the point 0.5 of the wick, just how I do it personally. But as soon as we close really under this, then I can move my stop loss to break even. And I could even trail to here or scale in. And that's how you scale in with new invalidation levels around the opening price of new candles. So here we form a swing point on the 30-minute time frame. So once you form a swing point, what should the fourth candle do? The third and fourth candle should distribute. The candle 2 is the reversal candle, right? So here you want to enter on the opening price, wait for that wick to form, to then cash the expansion candle, or expand the the body of this candle, and to the objectives. You see how price. This is how distribution look, like true distribution. We don't really make these deep runs. You want to see fair value gaps as well, and yeah, you can see this breaker here. You have a little unicorn, whatever you want to use. Breaker, fair value gap. That was a really clean example there. But yeah, I like to manage pretty aggressively because I know how distribution should look after manipulation. Do you always look for SMT as influence? Yeah, for any manipulation, I look for SMT. And then you're going to combine a manipulation with a driver. So like you want to have it either be like an economic red folder or like 930, right? And you want to look for SMT there. But the key for me for manipulation is I like for it to create the low of the day because the logic behind that, I like the sessions to form in a certain way. But the reason why I like to, you know, have this at the low of the day is because what this is doing, let's say I enter here and the daily open is like right here, right? I'm using the hourly chart, hourly swing points as a manipulation. The daily candle at this point is going to look something like this. And I'll be opening here. It's going to look like a bearish candle, right? At this point. But what this is doing is just creating the wick of the daily candle. So I'm not expecting this to be a bearish day. I'm expecting it to flip, right? And at this point, when it's like this, at this point, we already have a lower time from CSD. You've already had the confirmation. So what I'm doing is entering around the opening price, or I'm positioning myself in the wick of this candle or around the opening price, to then catch the daily expansion. That's what I'm doing. But I'm also doing this on the 4-hour time frame. So a lot of times, you're going to have the 4-hour candle manipulate, you know, s- um, the hourly low. It can be a 4-hour low, whatever. And I'm going to use the same logic as I do, right? This candle manipulates and when you trade the next candle. Now I'm actually aligning expansion candles. I'm aligning the daily expansion candle, but I'm also aligning the 4-hour expansion candle. That makes sense. So here would be like 930 manipulation or a driver ideally, um, and with the S&T. But if we manipulate prior to a driver, let's say 930 opens here. You do not want to see price. You don't want to see 930 sweep again. You want to see 930 expand away from the manipulation. That's your confirmation. Like I showed an example of that earlier. Also have an example I can refer to on gold. I actually have back-to-back days that I traded uh, here. So if we're going to refer to the economic calendar, here on the daily chart, I'm trading this day here. I'm trading back-to-back days here. But the narrative here is we have a manipulation of these lows with an SMT here, right? And if you look, the confirmation for this distribution is the failure to displace or displacement over this high. So we're not going to manipulate this high. So we're going to see continuation through this high. And then we're not going to reverse from this high. We're going to go to this high. This is my draw, basically. So it's pretty simple, right? So all you need, all trading is really is having a draw, and then trading within a candle to get to that, an expansion candle to get to that draw, and then trading away from a protected swing towards your draw. So like, I don't want to trade away from failure swings to a draw on liquidity. I want to wait for some sort of lower time frame protected low, right? To trade towards that draw. That's all it is. So I'm doing double here. The manipulation here, the wick of this candle is an expansion or a small closing run, which supports an expansion candle, but it's also manipulation creating that wick. If you look on the lower time frames here, on the hourly time frame. So here, again, you have an hourly swing point creating the wick of this candle with an S&P. So you have to check both checks here. Now I have the driver here. Hold up here. It's 8:30. So if we manipulate prior to news event, like I said, this is CPI by the way. Um, I want to see price expand away. So either it's going to validate the manipulation or just expand away. It would be different if it opened like up here. If price opened up here, then you want to see a shallow, you want to see like an opposing run to the draw, but not too deep. You just want to see like it create a protected swing essentially, which is I'm going to show an example the next day. So it would make create an opposing candles and then close through that. So this would be like the driver. I can draw a flag. That's terrible. Looks like a P. But yeah, it would look something like that. And you can use this driver as continuation. But here, we open near, we open very close to the manipulation. When you see it validated, here's your confirmation. And I traded this right here. This manipulation, so again, protected swing in the lower time frame to trade to that high up there. But yeah, you could have entered here as well though, but I was not on the charts. But if you go to the next day, the narrative here was it's a profile taught in the lens by AM Trades. So I'm not going to really tell you. Can't really show you that, but just the logic here is basically expansion into a high with SMT, right? The previous candle hitting this high. I expect a new pizza price this next candle. I'm always going to focus on the next candle, and I want to trade expansion back into a range. If I'm going to trade back into a range, I don't want to trade retracement. This is not retracement. What you see here, this is a manipulation. I don't want to trade away from failure swings back to a range. No, I don't want to do that. I want to trade manipulation back into a range. Oh, so basically, I have a draw, protected swing. Right here, it's all the same thing. The reason why I want to trade manipulation, because I want to trade expansion back to the range, right? So that's the logic here. And I want to trade within an expansion candle, right? So what that requires is a small opposing run, just like you see here. If I go to the hourly time frame, right? You see this here. You have expansion, consolidation, manipulation, confirmed by the CST here in the Asia session. So if Asia manipulates and also expands, then we can see either a continuation or like a retracement in London. Let me form this S&P here with silver. If I show silver, it's pretty clean because we have, this S&P here. And then when you look at you just do like analysis through multiple assets. When you see that there's no established low of the day, and you have this manipulation here, and then failure swings as well down here, this adds to a narrative of gold going lower. So you could trade this as well, right? But you see the failure swings here, which would be like your little vertical consolidation or whatever. But this adds to the narrative, right? You have London manipulation. So when you think about an open high, low close candle, exactly what you want to see. You want to see it go open high first. So you have open high, creating manipulation, and then low close. So if I go to silver here or gold, back to gold, I open up the chart because I'm a New York trader. So I open up the chart here. This is my draw right here. The pre-sales low, which is the fair value gap high. We have news. So I'm going to use that to my advantage. So inside of distribution, all we want to trade away from is protected highs and lows, which is like opposing candles, but ideally we have like a manipulation. So here we have 8:30 make the opposing run to the draw, forming manipulation, SMT with the correlated asset, into this 30-minute fair value gap. So as soon as we close below here, That's your news driver continuation signature, right? And then I'm getting in right here. So like no drawdown was kind of crazy. And then again, I don't put my stop loss here. I put my stop loss around here because one mini is it's actually a lot of money at this point. I think it was like $300 or something just for this little stop loss. So if I put it way up here, my risk is way too much. I put it down here. Um, and yeah, I just took it to here. I just closed full position right there. Yeah, but it's all the same thing, right? Open, high, low, close, expansion candles. Um, we're just referring to what session manipulated, right? That's the if then process. So London or Asia manipulate. Then I want to trade in continuation in New York, but the protocol for continuation in New York is when there's still a draw intact trade too. If there is no draw, let's say London expands, like creating the daily range, then I'm not going to look for a New York continuation. Doesn't make sense. Uh, what's your preference in practice on ES or EQ with the strategy thought? Oh, what is my performance on EQ and ES? I did a fractal model back test. Is it this? No, it's not this. This is like my strategy, but I don't know if I have it on here, bro. That's not it. I don't have it saved, but it's on my Twitter. Oh, maybe it's this. No, it's not this. It's fine. I don't have it, but it's like I did. It was a pretty good back test. It was like 80% win rate. But the thing about my approach is I almost can trade the fractal model like naturally. It's just there, like the same approach. So it's pretty good. But it's the way you use the model, like when and where you use it is what is actually important. That's any model though. Like that's for like the 2022 model or a fucking inversion or whatever. It's about when and where you use it. It's not really the model necessarily. But what's cool about the fractal model is it's completely mechanical. That's actually the sauce part about it. And you're basically trading IPTA, phase of price, and open hella close mechanically, which is pretty cool. How to get rich in 2025 quick. Eliminate losers, don't add. Yeah, that's exactly. Not every day is A because not every day is A setup. So you see my approach, you're right. Not every day is a clean profile or something. But this is why I trade you see all these assets? I mainly trade the indices. Um and then gold and oil. But you see these like little, gas and copper. Actually the last time I traded copper was a while ago, dude. Because I'm extremely picky with what I trade. So I can actually get away with trading a lot of these assets because a lot of these assets I don't even get one trade a week. So like on NQ, I don't even think I took. I know there's like two trading days that were eliminated, but still, I didn't even see one setup. On ES, there's one setup. On uh, RTY, there's one setup. On gold and oil, don't think there's a single setup. Thing. I'd have to check, but um, I'm more of like a hit my one trade a day or something, maybe two, and I'm out. But here is like perfect. So I require manipulation, like I said, on all these assets, especially on like natural gas and platinum, copper, because there is no SMT that I know of. So I have to have a manipulation. But as you see this here, previous day manipulates. You have all these failure swings to target as our highest I can draw. So again, I want to create some sort of protected swing to trade to that, right? Within an expansion candle, it's all the same thing. So if you just look at face of the price here, expansion, consolidation, manipulation, creating the high of the day. This is what I could trade pretty much on any asset. I don't care what asset it is. I would trade this all day. Um, so again, I'm putting my stop loss around the body, something like that. This is a 30-minute candle. This is all I need to see. I don't want to see price sweep this again. The 30-minute close is fine. And then, yeah, I'm looking to trade to these lows, but we never get there. I'll try to get Monday's low. I had to close my position at like 1500. Yeah, like right here. That was that trade. You see how it's all the same? But I have to look at majority of these days. You don't have that profile. You have this one. For a London trader, this is really good. Actually, it's not because, yeah, it's actually not. Because we fall short of this. But it's kind of the same logic, right? Where we manipulate. And I look at the opposing side of that manipulation. And there is no established high, it's just consolidation. So I want to trade back this. There's also no wick daily candle. The only thing about this is the opposing run for the day is very large. You have to adjust your targets. Like here, you can really trade to this at the daily open or a little bit past that. But it's the same logic. Right? And you see this V shape, your reversal signature, expansion, expansion. So you want to see. Right? Balance trade like that. So, but all these days, New York session ass. This could have been a potential day right here. But this high right here is completely irrelevant. This high is irrelevant to me because it's a failure swing for this high. So I want to see this high get swept. This high is irrelevant to me. A lot of times you're going to get chopped. But this would classify as my, what I want to see, right? Expansion, consolidation. I want to see this, the high of the consolidation get taken to then expect a continuation in there. But you don't get it. See, like all these days, they don't meet the requirement. Here we have a consolidation high that you could be targeting. You have a manipulation at the low of the day. So again, if you're a London trader, it's cool. But yeah, like this is my last trade. You can look at every single day in New York session. There's no trade. So I'm like really picky. That's how you get a higher win rate. When you are demanding high probable setups. What's your performance in backtest? Oh, I already went over that. Analysis GU. I think it's similar. It's just like consolidating. Yeah, it's literally just consolidating with one candle. So again, we expand into this low. New phase of price. It's not going to be a reversal because basically when you see this, it's a potential to be a reversal. Potential. But when you see price like failing to displace away from this candle two closure and it just consolidates, we just get this thing inside bar. It's just clearly consolidation. You don't even want to touch it until we take out one side of the consolidation. Right. But if you look here, there's a potential like so Monday low gets taken there. Monday low. Okay, this is weird. Like some type of SMT. Hold on. So Wednesday, no, Thursday's low of the week here. Okay. Yeah, this is not bad. It's like inside range. It's more of like a weekly um, range trade because you have Monday, Tuesday consolidation. You have Wednesday, or sorry, Thursday reversal because there's no Wednesday candle because Christmas. But you have an SMT right here. So you basically have consolidation inside of a consolidation, but you're trading back to the weekly highs, basically. But like here, if there's a profile for this, which there is, you should be open low first. See how we consolidate here? You manipulate, creating the daily wick. This is fine, especially when we get this hourly close above. This is fine to trade to these highs and whatnot. Especially there's an SMT here. Clear, some sort of clear SMT, obviously. Yeah, you could just see the SMT the previous day, but I'm looking for SMT maybe at this high. There's not. There's SMT right here, actually. But ideally, you want to trade the stronger asset, which would be actually EU here, technically. Yeah, you can just see this. This is actually cool as shit. You see this consolidation here? So the daily candle opens low first. This is absolutely irrelevant. Anything internally to this is totally irrelevant. Like this opposing candle, like totally irrelevant until. Oh, sorry, never mind. We actually swept this before we went up. I don't know why I thought we went up and then swept it. But yeah, once we close over this, after we actually manipulate this low, then we should expand, right? Because after expansion and then consolidation, shouldn't reverse from consolidation. So yeah, this is fine. So we then trade to this high, which is the previous high. And then you could have looked right here. We just didn't have enough juice. It looks like um, the strength actually kind of switched to GU kind of being the stronger asset. Look here. See how we close way down here. GU closes up here. But majority of my trading, like I said, is just intermediate time frame models. So it's like I'm gonna have a higher time frame draw, like for example this, but I want to get in, like I said, around manipulation. So around the candles wick, right? So I want to get in before we even take out the intermediate time frame draw. After we take this out, I'm simply just managing my trade to this high. Pretty much. I'm not looking to add on to this because after expansion into a high, we could do this exactly here. We could consolidate, retrace. So I'm looking to get an after manipulation to catch expansion into these highs. That's my focus there. But yeah, as far as like going to the week, like these equal lows are pretty sus. So ideally, what I would want to see is like something like this, where either Monday consolidates or whatnot, and we basically form the high of the week here. I want to see price open high first, a weekly candle, open high first, ideally a reversal off this high, then go lower. That's what I would prefer here because when I look at this, doesn't really look like a reversal, especially on the weekly chart. Like it's just a consolidation candle. So that daily swing point is just a weekly fair value gap high. So yeah, I would want to see this swing. This is range, basically. This swing point, to do its job, deliver to this low. Much. So we have candle 2, candle 3 for expanding, candle 5 just like consolidating, obviously because of Christmas. But yeah, it might consolidate though, just because of the end of the year. Wouldn't be surprised. Can you please go through YM one more time with an example? Oh yeah, sure. There's actually a lot of examples here as well that I traded. Which let me try to find one for you. So, I think I traded this day or something. I don't know what day I traded, bro. Let's look here. What day is this? It's a Friday. So typically, when you think about a weekly range, when Monday's a high, you don't really want to trade a Friday short. Like that's not really usually how this goes. But you can't ignore this here. If there's SMT right here, like only if there's SMT right here. By the way, I mean, if you want to use, kind of hard to say. You want to use these as I was more so looking for RTY SMT, which there is. There is SMT, but it's not with the high that I would want. It's like PD array SMT, which is fine. It's more so like this. But what I'm seeing here, I already remember this day actually. It's the 4-hour candle. So you have a range from high to low. And again, 2 AM candle, we hit this fair value gap. So if you know my candle rule, I'm always focused on the second and third candle after we hit a key level. And I'm always looking how candle 1 that hits the key level actually closes. If it closes an expansion candle, then I'm going to refer to this high as a reversal point because I know that the reversal hasn't occurred inside this wick. So I can refer to this high basically as a reversal point. Basically, I want to see a shallow run, creating the reversal off this high, and I need to see a shallow run, like I said, to support an expansion. So there's really two ways a reversal candle forms. It's either reversal into expansion, reversal as in it just takes out the previous high uh, candle and then puts in a reversal like this. It's technically a reversal. There's a couple ways these form. First off, a relevant time. So it's a relevant time, right? But mainly is candle needs to go open high first, ideally. A lot of times in these indecision candles, like this one and this one, we actually go open high first and then create the low and then we reverse. So there's a reversal inside this candle, but it's not an expansion candle because of the way the candle forms. That's one way, but the other way is if we just create a large opposing run, right? 'Cause that just doesn't support an expansion candle in general. So if I show you here, see this large opposing run? This doesn't support expansion to the downside. So this is when you would look for the next candle to expand. So this candle here, if I show you this candle, or you're gonna frame reversal, let's say, off this hourly high. First off, what did this daily candle do? It opened low first, so not something I would even consider, but that's not really the point. Basically, if this high is gonna be a reversal point, you see how the opening price is really far away. So it doesn't support an expansion candle with this small wick, right? If you look here, it's a better example actually. You see how this candle, the first candle hits its fair value gap? I want to focus on the next candle. I already see that price most likely formed a reversal in this candle, not only because we closed below this high. Look on the 15-minute time frame, we'll probably see it a little better. But yeah, we just have like this here, right? We already have the reversal. So this is when I would want to see this next candle go open high first. See it goes open high first, creating that wick, and then you get, the confirmation there. That kind of makes sense. Uh, where was I at though, bro? If I can far replay back. I think I was right here, right? No, it wasn't. No, this wasn't it. This is an okay example too, though. All right, right here. So the reason why this S&P is okay is because of the way we're trading within an expansion candle. So if you actually look at this pullback at this point, we've already delivered very far away from the opening price of this 6M candle. So what does that mean? That this 6M candle is not likely to close an expansion candle. So I want to favor short setups because I'm basically this candle that I'm trading within is actually supporting that, right? And if you look at the daily profile, we have Asia lows, right? So that's always good. So basically when I see 930 make the opposing run to the draw from this 30-minute fair value and also SMT, then I want to trade on side with that. And you just see the 50-minute close, right? It's very obvious that price wants to go lower. That's because we're trading within this candle. And we haven't yet reached a significant draw yet. That's what's also key. This is the significant draw. See how we haven't even reached that yet? So I'm not even considering this posing run to be a reversal at all, just because of those two factors. So we form a reversal kind of here. So you could frame a fractal model, open, high, low, close here. And I actually remember I took this trade uh, right here. If you trade the fractal model, you already see it right here. But yeah, uh, that was that day. But if you look at some more recent stuff, I went over these two examples here. Like last week. So we have Monday, we have a range from high to low. On the daily chart, we run out this daily swing point. So we have a reversal, potential reversal. So you want to see continuation away from that reversal. So Monday, the weekly candle goes open low first, which is always ideal. So when at this point, coming into Tuesday, you can ask yourself, is there really a protected high of the week? No, it's literally just a fair swing. Like, so this is the high of the week at this point. So we want to trade back to that. So I can see inside of this wick here, this Monday's wick, you already form a reversal. So I want to see price. It doesn't have to tap this area, but I want to see it respect it at least. So if we're not going to, key off of this area, this opposing candle, because it's the only relevant key level inside of this wick, and we need to create, an established low of the day to trade away from. Like I said, we want to trade expansion candle. So look at this wick. What is it created by? A manipulation, the hourly time frame. Combine that with an SMT and a driver. So literally, this is perfect, right? We have expansion, consolidation, manipulation, SMT at the low with a driver. So 930 makes the opposing run to the draw. This is like perfect, right? And then again, look at this 6 a.m. candle. 6 a.m. candle, 4-hour candle is very important. See this reversal? I am expecting 10 a.m. candle to expand. Right here, we actually don't even form a wick, which is not ideal. But you want to see this 10 a.m. candle make a small low, some sort of PD ray into this wick, and then expand higher, which is what you see this day here. So we expand to this high. We do not form a reversal off this high. So we form more of a retracement signature where we're just leaving failure swings at this high. So you don't want to trade away from this. The same thing. If there's no established high of the day at the opposing side of this manipulation here, this S&T manipulation, then I want you to trade back to that. That's my actual added narrative. You think of the daily candle? Think of the daily candle, a bullish candle, it goes open low first, right? And then I can trade it with manipulation that creates the wick. Here, open low first. That's the key. And it's also a shallow run. This is not really a shallow run here, but the fact that it's manipulation, just with the daily profile and the economic calendar. So again, a driver manipulates here. It's also an hourly swing point. So keeping it like somewhat mechanical as well, right? You can draw out the 50% of this candle, just like you could have the previous day. You can reference this wick. Right? We don't want to see a deep run. Here is a deep run, right? So if it's a deep run, you need to adjust your targets. And the fact that we are forming this reversal around that area is fine. It's also at a fair value gap, right? If this loads. So like I said, if 6 a.m. reverses, just like I did here, what do you want to see? Open, low, high close for the 10 a.m. candle. So that's what we see, right? We see open low first. Like the same thing. Look at the opposing side of this 10 a.m. high when we open low. What is it? Just feather swings? So that adds on to the narrative. The opposing side of this little manipulation here, feather swings. So it's the same thing, pretty much. And the confirmation to this manipulation is not only SMT, but it's when 930, the next driver expands away from this manipulation. That's your confirmation, right? And you're always going to have an invalidation point, right? You can use that same logic of that small opposing run for 10 a.m. You can mark out this candle's high and low, and I want to see this wick, the 10 a.m. wick form in the upper half, right? So you're always going to have a PD ray in the upper half of this candle's leg, right? And that would be this. That would be this bulky candle. So essentially, you just want to see an established low form in this range, this opposing candle. And that's what we see here. This is the established low, essentially. When we actually take out the short-term low inside of this opposing candle. This is the 10 a.m. wick. So we're always entering around the opening price. This is the opening price at 10 a.m. Right? You want to enter, this would be entry. Stop loss here or the body candle. You see how I'm entering around the opening price of that 10 a.m. candle to then catch the body, which is just an expansion to this high. So yeah, that's a YM example. Greg, what's up, Betty? Half the count, 1-to-1, half the count. That's crazy. How are you going into this week? Yeah, I am gonna trade this week. So if we go on like indices, like I said, I traded last week. So like, so we're just when you open up into a range, you're like opening in the middle of a range, which is like not ideal. Um, so basically, what you're going to wait for is it's either going to be a reversal here or a continuation. Like it's the only thing to happen. Like we either respect this range or we displace through it. So you need to wait for an established higher low to form either side. Like if you're going to continue lower, right? We actually do have an S&P up here, I think, right? Yeah, we do. So we have this S&P here. Now when I look here, there's these equal lows that kind of caught my eye, but I need to see what you'd want to see basically. This is the only relevant area. This fair value gap could be high at the either Monday expand or maybe consolidation Monday. Just form some established high here to trade these lows. Um, because I don't think we have an established low to trade away from. Yeah, I wouldn't really consider anything in here as an established low to go higher, not necessarily. So that it would have to do that like intraday. So if we consolidate, manipulate here, you know. So it's just about the weekly, uh, the daily development, really, at this point. Like we can possibly say this is a reversal, but you never know. You always want to restart that confirmation, just the weekly profile. But we could say, these equal lows look good. We have this fair value gap, right? To possibly the candle 4. So you have a swing point for candle 4 to possibly go lower. That's the only thing I could really think of. Gold here is a little bit more interesting. You have these equal lows here. So you had this manipulation. I would not want to see price resweep this high. I want to see early week. If it's going to be bearish, a true manipulation, early week we are going to expand away from here. So it's just like if I look here, it's literally just like this pretty much, where Friday manipulates early week. I want to see expansion away from that. So Monday, Tuesday, Wednesday, we expand away. If this is going to be manipulation here, we're going to close to this opposing candle. And then once we do that, you want to see that being respected as well. So like, I just still need like confirmation. But, we have potential reversal points potential for these assets. CL, I put out analysis. I don't know why I did that because I basically said it's the same thing. So like Friday manipulated. I want to see a bullish week, but I wasn't really thinking. Literally Christmas week, so I'm not expecting I shouldn't have expected some crazy expansion week, but that was my idea scenario. Where like I don't want to see this low being revisited by the weekly candle. Like I don't even want to see the previous week low being taken here. Um, so Monday we had like this. You could have been long. It closed bullishly, but I'm gonna show you why this is invalid. I'm gonna show you why this is invalid. It's because we open high first, and then we create manipulation at the high of the day. So trading this day back to the range, it's just like lower probability. That's your invalidation right there to go long. But the next day I think was like next couple days were just like kind of choppy. This day was decent. Look at it. So here, you have that reversal inside that wick. Then we open low first, which is good, right? But looking for any SMT here. I haven't actually looked this day. Oh, this is a lot more interesting on this pair. Like way more interesting. I like this a lot more. But again, here's the key, right? We open high first, but we didn't actually create an established low or a high. These are failure swings. This is the delayed protraction profile where we're manipulating the daily range. So it's basically like this. I learned this from fees, by the way, so that's all credit to him. Essentially, when the daily opens, it just trades higher, but it doesn't actually create an established low today. It's just failure swings. So New York will actually manipulate the daily range and then expand away. So it's basically like expansion of these lows, creating the daily wick, basically creating that small opposing run, expand away. This is like textbook right here. There's SMT right here, as you saw. So this right here is fire. And this is one of the profiles I look for, right? Where we have manipulation of low day, SMT, creating the small opposing wick. Look at the previous day, what it did. Expansion, mouth expansion. So the reversal's already occurred. So I'm really looking at this as a range low to high. If I draw out the 4-hour time frame, probably a fair value gap here, right? We do have a fair value gap. So it makes sense. It's actually pretty clean, to be honest. Really clean. This is where I look for the fractal model. You can just see it, right? Candle 2 closure, candle 3, candle 4 expansion. Use it with manipulation. So yeah, I would look for continuation on CL. Like here, it's just consolidation pretty much. 4-hour time frame. Yeah, it's just consolidation pretty much. On CL, I think it looks a bit better. I think. Yeah, we like close above this opposing candle, which is not like necessarily a relevant opposing candle. But no, it could support price higher. Look at the 4-hour time frame, probably something cleaner. Yeah, like this fair value gap. It is an opposing candle on the 4-hour time frame. These series opposing candles. I would not really want to see price go and sweep this low out. I want to see it distribute this high early week. But it's not like we have some like very clean, clear, like price action. It's pretty ugly, honestly. Like you don't actually want to see these deep. You see these deep retracements. I don't actually like that. Not really. I think it's great. But I mean, it makes sense because if you go to the weekly time frame, go to the weekly time frame on CL. Disgusting. It's absolutely gross. After manipulation, a previous candle or section on or sections. Is it okay to enter trade or target opposing? So you're asking me like basically if we have candle 1, whatever, candle 2 manipulation, you open up here. Are you saying can you just enter this? Because yeah, you can. You can anticipate this candle for expansion, but if you want to be safer, you should just think about like a propulsion block or whatever. You have the reversal already confirmed, but a confirmation to this is just a propulsion block. That's like, first stage distribution in a market maker model. This is the lowest buyer sell. This is first stage. Anything after that is basically just redistribution. But yeah, you can. It's a bit riskier. Bitcoin dump right now. Bitcoin on the weekend. I saw someone ask me yesterday about Bitcoin, and I just looked on Saturdays and it's absolutely terrible. Bitcoin on Saturdays are like consolidates. Uh, so if there is S&P here or something, then yeah, that would be nice. So if I look on Ethereum, Mm, nah, it's not really that clean. It's really just like yeah, it's not that clean. I think like if we manipulated either this high or at least this high, then I would trade it, but I don't think it's that clean. Yeah. It's pretty like the continuation signature is really clean. Where like this day expands, this day retraces, and then we expand again. Or it can be a consolidation, doesn't matter. But to trade away from a consolidation or a retracement, I want to see a manipulation, which we don't really have. Like this is just better swings. Like I don't really view this as a manipulation here, to be honest. It just consolidates after we take this side out. Like not likely. If we did have S&P here, it would be really clean, like super clean. Yeah, it's probably going to go to this low. Like it doesn't have to actually manipulate, but I can't anticipate when it expands if it doesn't. I just don't trade away from those. I'm like super freaking picky. $9.50. I don't even use macros. The thing about my approach is I need to see like the face of price looks like perfect. It looks absolutely perfect, but um like I don't have any manipulation to trade away from on the hourly time frame. I try to keep it like mechanical as possible. Um but like this is fine. Like this is okay, to be honest. Because if you trade like this, you have like an hourly change state delivery. It doesn't look clean to me. But if we're just using the hourly change state delivery and then just having a continuation signature off that, let me check if there's SMT here. I can. Shit. Like let's say there's SMT right here. If there is. I don't know if there's. I'll have to like check. This should be your continuation signature right here. Something like this. On lower time frame. After this retracement. Because you still have this draw intact. I mean you can enter this fair value up to if you but there might be like some lower time frame SMT, like right here or something, but these are all fair swings, so when you see an SMT like that, it's not as significant as the actual, high, true high. Boop, boop, boop. Only my screen that's lagging for sometimes. Oh damn, I hope not. Is it? Oh, this is a public stream. Yeah, we probably are gonna go to those lows, but I wouldn't trade it. Personally. Oh, so that was SMT there? Yeah. Yeah, like I said, if there's SMT there, it can be a continuation because you at least need to trade away from some sort of protected high. So if it's not going to be here, if it's going to be some sort of continuation, it needs to be some sort of protected high, which would be right here, pretty much. Like I said, because we haven't actually drawn into this low. So like this would have to be S&P for me to trade. There was. Yeah, not terrible there. Gold sick. What are you talking about? What's got that about? Dude, I'm really behind. Holy crap. This is dude, it's like 10:55 and I'm reading chat from 10:12. I'm skipping all this. That's crazy, dude. Which ICT videos do you recommend to? Dude, I haven't watched a single ICT video. Maybe I have, but like I didn't finish it. I can't learn from that. I can't learn from, like, 2-hour videos and, like, PowerPoints, like, I can't do it. I learned from, like, T-Trades, MXM Trader. Like, I would rather spend time on the charts than time, like, watching videos, because that's a lot of time, bro. What should you watch? T-Trades, Afees is pretty good, MXM Trader, I don't know, stuff like that. Check this. Alright, yeah, not bad. This is Asia? Oh, yeah, this is fire. Because notice how we go open high first, this candle manipulates here. So I'm focusing on the next candles because I don't want to see price hanging around. I don't want to see 3 or 4 candles, hanging around the side. That would just be like consolidation. So that's the logic there. And then you can see the continuation. That's pretty clean. Especially if there's like SMT right here. But yeah, that's fire. On your USD, do you expect a sweep of Friday's low before previous week's high? I think we're opening near the high, so I wouldn't want to see that. Let me check again. Yeah, like I wouldn't want to see that because I want to target these lows. See these like fair swings and just this low in general. So I wouldn't want to see price go open low and then take out these highs and then low again. No, you want to see go open high, use this as a reversal point, close below these up close candles, and then go lower. That's how you'd want to frame it, but we'll see. So you look at this here. If you're gonna frame a continuation, right? You have this manipulation. So like I said, if we manipulate prior or like manipulate on Friday or something, I want to see early week expand. I don't want to see it, mess around. I don't want to see any of that. There's no need to. It should just expand, right? So you see Monday, Tuesday, Wednesday, Thursday, they all expand at these lows. And if we're gonna see a continuation, just offer this range, like give a opposing candle here, high, low. Then I want to see price open high first. You have all these little highs that it sweeps out. You have a reversal candle on a Tuesday. So I want to see a Wednesday continuation, right? This is a very large range here. Again, we can get a new phase of price after expansion, right? Because we took out all these lows. So the rest of the week, we just kind of consolidate. And we're still consolidating. So if you look here as well, you just look at like literally any candle. Look at here, right? We expand the previous week, then we consolidate. So that's a continuation signature. So in order to trade a continuation or consolidation, we want to see manipulation. So how does this week form? Monday open high first, open high, Monday, Tuesday consolidation, Wednesday midweek reversal, Thursday, Friday continuation. See that? The candle open high first and then low close. It's the ideal scenario to get that weekly candle. How was your day? Good, bro. How was your what series from T-Chase? He's putting out a lot of good videos today. He's putting out entry sequence, which can help a lot of you guys probably. Um, just a lot of the individual concepts you don't understand. He's like the best channel to go to because it's so simple and quick and straight to the point. Um, but yeah, I mean, really everything. They're so short. The videos are so short. You might as well watch all of them. Would you be able to frame any trades this day? Because I see no reversal. Uh, nah, I don't think so. Oh wait, when's the daily open at? Are you talking about Monday? Talking about Monday? Oh no. Not really. Like you have the, we opened low first, you have this opposing candle, but if we don't have this manipulation, if there's no SMT here, then I'm good. I wouldn't trade it. I for keep gapping. Uh, USD. So then sweep of Friday high would be ideal for it. Yeah. Yep. No, you don't need to wait for a daily CSD. Let's say Monday or Tuesday form like a candle two closure. You can just trade the next day expansion. When you get the CSD on a reversal area, put price return and manipulate and recreate the CSD, then validation. Oh, I know what you're talking about. I can refer to this example here. So it's not like invalid, but I have this rule where I want to see the reversal happen in two candles. So I know what you're talking about. So like I think it's what you're talking about. Where like we have this reversal coming here. This is totally valid and ideal to see the reversal happen right here the next day. So like open high low close. But if it just sweeps it again, like this is fine for me. Because we're still failing to displace this high, but I need to see this next candle reverse because that would be basically, we have one candle here, or basically like candle two. Um, so this is the candle that hits the key level, right? Candle two has to form the high of the reversal essentially. I'm not gonna wait for candle three to form the high. Does that kind of make sense in a way? I have a YouTube video on this, I think, or some shit. But yeah, I actually traded this day here lower using that logic. But usually it's not ideal to see. I'm gonna say that it's not ideal. Um, so here on these reversals, you have the same rule where candle one hits the key level, it's an expansion candle. So candle two needs to form the reversal candle. If it forms a reversal candle, then I do not want to see a candle two, or sorry, a candle three take out this high. That would be invalid. Here is a bit different because candle one, it forms the reversal, right? Because it's the first candle that hits key level. It's the first candle that hits key level. It needs to form the reversal in two candles. Like that's my kind of logic. So here, technically forms a candle, the reversal in like one candle here, and it trades away. And you see the same logic for like continuation where this candle is key level. It's also a reversal candle. So most of the time, if it's a reversal candle in the first candle, like here, so here and here, it usually does distribute. That's the ideal, thing you want to see, but it doesn't always happen. But majority of the time, it does. Like, I'm gonna try to find an example of that happening. That's majority of the time. Uh, I can't even find an example. Oh, here's an example. So here's a Monday. This is fine here. Your Monday opening low, and then Tuesday just opens low again. But you can still trade Wednesday continuation just because there's no established high of the week. See this? This is failure strings, so you can still trade this. But a lot of times, if there's no reversal inside of this, which there actually is in this scenario, but let's say this candle here doesn't actually form a reversal, then it's more likely to fail. But in this case, it does form a reversal. We just don't respect it. We just displace to it. It's just little consolidation high. I'm not going to trade away from that the week. I want price to come back to it. But it happens sometimes. Oh god. Yes, I've seen that video. Not really. So you're drawn. You drawn. Any place we can find you backtesting the foundation model? I've backtested a couple times. I have a videos for the lens, backtest the lens or the fractal model, but not the foundation model. But I can definitely do that. Because mine is like a mix of both because the foundation model is just trading expansion, right? And then trading away for a protected swing. So very similar to how I trade. So it's like I almost trade both though. because you know how AM doesn't necessarily trade within candles? I actually do. Like I don't use 7 hour, but I trade like the 4 hour expansion candles, open outlet close. So I'm just naturally trading the fractal model a lot of times. I'm trading with an hourly expansion candles, which is not what AM does, but so that's like I use the approach of the foundation model, but my entry model is like very similar to the fractal model. Like I'm just aligning expansion candles, and I use the intra candle CSD. You guys know what that is? Um, hopefully that answered your question, though. Did that answer your question? The hell, dude? Do you trade Monday? Yeah, I do trade Monday, especially if like Friday manipulated. Break is like the biggest troll, but yeah, I'm trading at close market. I'm getting position. Hold on, Monday on NQ or something. I think it. Hold on. Oh yeah, I already went over this. Why it's like it's valid, but I already went over why I didn't trade this here. Like there's no SMT here. That's for one. And then 930 failed to actually create the manipulation. So I don't have two of the things that I want to see. But as far as like the opposing run for the day is fine. Um session it's the logic of phase of price is fine, right? Expansion, consolidation, manipulation, pin load. That's all cool, but I'm still missing two of the things I want to see. I trade this day though on ES this high. But yeah, you could have technical for longs because pre-state didn't. When do I trust inverse fair value? I told basically, I don't really use them, but I could easily use them just with my approach because I'm trading manipulation. So really, all you're gonna look for is an inverse fair value gap after we tag this low. Which I don't know. We have it. Maybe this one. You know, it's as simple as that. Pretty much. Uh, I traded this though here. Okay, just manipulation, SMT. So essentially, we had 930 open right here. So we had SMT right here at first, but when 930 fails to trade away from this manipulation, and then shows a willingness to trade with this high, then this is going to fail. This SMT is going to fail. This is my target. I traded from here to here. So let's check if there's like SMT or an inverse here. So these are the areas where I would look for it. There's after manipulation. This looks ass though. Yeah, like there's no inverse for value. But if you're looking for a continuation, maybe because at this point, this low right here is like irrelevant because it's just a failure swing. So I expect price to, it just adds onto the narrative for a continuation. We don't really have a key level that it retraces to, but it's fine. We basically just have the 4 hour open. The 4 hour opens up here and distributes lower into the failure swings. So if you wanted to confirm the 10 a.m. high, essentially, maybe an inverse fair value gap, something. But look at this day actually. Like here's a good example. Yeah, this is probably fire. So I trade this on yes. Yeah, I think yes. But you see how we're taking out this low? This is when you get the best inversions probably. I wouldn't know because I don't trade it, but it would make sense, right? Expansion, creating a fair value gap, expansion through it. This is where I would look for it. Probably can refine it to like a 3-minute or something. However y'all do it. But I don't really trade it too often. Yes, Romeo is my mentor. He's also the mentor of your mentor. Uh, Not sure if I missed you say already, but how you treat this week. And oh yeah, already. T trades. Damn, I should actually freaking. I should change to that, dude. That'd be a good idea. Mm. On average, how many trades are you taking per? Dude, I take a trade like every day, almost. But again, I have a like I'm very picky with like the framework that I have. I think it's like one of the best frameworks, like one of the most high probable frameworks in my opinion. Because it's literally just this, like it's ideally where the candle opens low, the daily candle opens low and doesn't create an established high of the day. So it seems like session highs in the form of failure swings. Um, and then we create the daily wick with manipulation on the hourly time frame. You're going to align some manipulation with the driver. Let's say 9:30 or something. 9:30. So I want to trade expansion, right? That's all I want to trade. So I can only really anticipate expansion after manipulation, and then align that with an SMT, so a driver with SMT, and then a close through. So now at this point, I can expect the daily expansion. So the daily open, it may be up here, whatever, right? Say it's like down here because that's more ideal. Ideally, I want to align some manipulation with a small opposing run. Let me make this real quick. So basically, this manipulation is creating the daily low. So what I'm doing is I'm positioning myself in the daily wick or around the opening price of that wick. And then I'm also waiting for the 10 a.m. open. So now what I'm doing is I'm aligning expansion candles. So I would expect a small opposing run for the daily continuation, but also just create the daily, the 4-hour wick. And I'm just trading the 4-hour body. I'm also entering around the opening price of this 4-hour candle. And I'll show you an example of this. So it's going to look something like this. So essentially my framework. Um, so it happens every week, like every single week, but it does not happen every single day. Like absolutely not. But I'm okay with that. So here we have it back-to-back days, or we have expansion. You see this Monday wick right here? See the wick? I'm framing a reversal off of that. So all this is really is just expansion, previous day, Monday, retraced. So when you think about the weekly candle, open low first, and then I'm looking for the next days to continue. So again, a manipulation, creating the daily wick. When I look at the opposing side of this manipulation, I see that there is no established high of the day. It's just a consolidation. So this right here, I I align this with a SMT, right, and a driver. So 9:30 makes this manipulation and SMT. So you see how you can anticipate expansion after manipulation, and you get the best expansion after manipulation as well. Here's the same thing. We expand this high. When you expand into a new high, you get a new phase of price, right? So if you go on the 4-hour chart, like I said, I'm going to align expansion candle. So this candle reversed. It's just like a daily chart. If the previous candle reversed, the next candle will expand. So I'm aligning expansion candles. I'm entering around the 10 a.m. open, but also the daily open. Same thing here, where we expanded this high, but we get a retracement signature where we leave failure swings the high of the day. So I want to trade back to that. Here, we have 6 a.m. candle forming a reversal. That is our value. But we also have a manipulation at the low of this 6 a.m. candle. So I can expect a 10 a.m. open low I close. So I want to enter around the opening price of this candle, which is what I did on RTY on the 15-minute and 1-minute time frame. So here we have this SMT, so hourly swing point, check. SMT, check. With the time driver, let's see, right? Check. 8:30 makes the opposing run, the draw. It manipulates. If 8:30 manipulates, what will 9:30 do? Expand, right? Look at the daily profile. It's the same thing as this, except we make a more exaggerated opposing run. But when you think about just the way candles form, open, high, low, close, open, low, high, close, it goes expansion candles. Ideally, they will go open, low first. See this open, low, high. See how it goes open, low, high. So there's also that. It's just like all these. It's like IPTA, the phase of price. It's open, high, low, close, how they form. Yeah, it's just that combined together essentially. Here you have expansion, consolidation, manipulation, distribution, retracement after a objective is hit. Like price is not going to reverse from these fair swings like this, these fair swings. So therefore, when we manipulate, it'll expand into those highs. That's how I trade. You're using PSP. It's actually PSP is really interesting. Actually, very fire. Actually, uh, Bitcoin. Nice, bro. You're rich. Show it. Show a PSP. Or let's actually look here. Where's the goat simple at? So I'm gonna look at these two candles. I don't know shit about what are we thinking about. All I know is simple sets use the SMT. So this is PSP actually here. Do I have it? Do I have it? I guess I don't have it. Unless I'm blind. Yeah, this should be it. Right here. What about this day? 9 o'clock. Bullish candle. 9 o'clock. Damn, bro. Yeah, I gotta start using shit. PSP both days, bro. It's just hard to thing I was having trouble with is finding out like what candle to use it with. Because like sometimes this candle, maybe on the 15-minute chart, right, will both be bearish. But when you go to the hourly time frame, it might be different. That's like kind of weird, but that's pretty interesting though. Simple. Yeah, it's a day's thing. It's like a form of S&T, right? It's pretty cool. All right, I'm probably gonna end this pretty soon. Oh, what type of rooms are you looking for S&T? Mainly like daily, whatever framework you're using. So like for the daily reversal framework, I'm using the hourly time frame. So I want to see S&P in the hourly time frame. Um, but it can also be like this. So for distribution, so basically distribution away from my reversal, you're gonna have S&P inside of this on the lower time frame. So it's gonna look something like this, like maybe we form S&P like right here. Therefore, you have a protected low to trade away from for continuation, like that. Or let's say there is no SMT right here. You might have SMT in the lower time frame instead of the wick, which can be a confirmation. But I always like to see it on the hourly time frame, ideally. And that goes for like this approach of just trading with manipulation, whatever, is like can be applied to any time frame. Um, so like here, there's an SMT. So what we have is a large expansion, right? And when we want to trade back to this range, let's say, there's a couple things that we want to wait for. So let's say you want to target this fair value gap or something. So first off, when we want to trade back into range, we don't want to trade retracement. I already went over this, but you don't want to trade a compare swing. So you're waiting for this manipulation to happen to then trade expansion back in this range, right? So one thing about this here is this weekly profile is a bit, you know, iffy. Like you can't expect price to really expand here because this is not how, the weekly profile doesn't support that because we did open low first, booked out these lows. So you could have traded this high. Now, it's not to say that you can't trade these 2 days, but your target, you need to adjust your target right here. You can't expect price to go way down here, just because of the way the weekly range developed, right? We can expect, Wednesday, Thursday continuation, but you need to enter around the opening price of this candle. So essentially, it's actually not bad actually. The opening price is right there, but it is an expansion candle. It's not going to be like as significant. I was thinking that it opened right here. My bad. I don't know why. Right there. But you can target that, right? But this next week here, you can expect continuation, right? You have a daily manipulation, this confirmation. I actually traded one of these days. I think it was this day actually. I think I posted on Twitter. Yeah, I did trade this. There's like SMT like right here. Right here. Look at the 4-hour candles. 6 a.m. hits a key level, 10 a.m. distribution into this low. Yeah, I traded that. I think it was like news too. Yeah, we have 8:30 making the opposing run, then 9:30 reversal. It was a bit ugly how it delivered, but yeah, I trade that. Pretty clean. Ish. Just want to see something. That's kind of cool. But yeah, you can trade this next week in anticipation of an expansion candle form. So basically, you want to see open high. We don't even need to like see significant manipulation just because the previous week manipulated is where you see you just expand back into the range. That kind of makes sense. Okay, cycles are really all time frames, but mainly on the daily and the it's like daily for like framework, but hourly, 4 hour, or like I'm basically looking at price through candlesticks. So like the daily candles, like the open hour close, and also the weekly candles. So let's say Monday, Tuesday, previous week expands, Monday, Tuesday consolidate. You can see this probably on the daily, but it's going to be really visible on like the 4-hour time frame. So what I'm just viewing this as is a candle, pretty much. And in order for me to trade expansion, because it should expand right again, we can't really reverse from consolidation. When we take out this low, then this is clear IPTA, right? Where we have manipulation. Then I expect the rest of the week to expand, or at least in this high, and then we can react off this high. which is what we see here, basically, right? You have a consolidation high. This is one of the ways we can leave a consolidation. So you expand, consolidate, we manipulate first. So open low first. You can trade this next day to this high. But look at the reaction to this high. We can't slice through it. We actually form a reversal. So expansion, reversal. We validate this swing point, like the ideal swing formation, with the opposing candle, and then you can look for continuation of that, especially on the new week open, right? Because this week reversed, so you can expect this next week to expand. Yeah, intraday, like I said, I'm using on the hourly time frame to give me a hint to where the daily candle is going to expand. So see here, it gives me a very clear picture of where the daily candle is going to go, just with the way the two sessions form. Right? Expansion, consolidation, candle reverse consolidation, manipulate below, the SMT. So I know this candle is going to be an open low, high close candle, right? Open low, high close. So it actually helps you a lot. Probably like the most important concept to me. On your approach of trading when you have controlled daily bias, I guess you can still take scalps in a 5 minute. But what about when you have a bias and then you got a scalp on the opposing side of the bias? You still take it. Okay. Um, like yes, sometimes, but lately I've just been taking like I'll like hit a win or whatever and just like stop because I trade like every day. I get a trade like every day. I'm not really tripping, but yeah, I will trade usually again. Would you take that 10 a.m. sell in NQ on Friday? So I took. Uh, so like, I thought the native was really clean for sells because what we see here is the previous day created this SMT, right? And Monday is the low of the week, so just ideal to trade back to that a lot of times. We just have these opposing candles or whatever. Previous day, reversal day, uh, with the SMT internally to that. But like this is fine. But when you open up 10 a.m., hell no, dude. I never take this, dude. Like we haven't really reached the draw liquidity, which could be this low. But I don't like entering. If you take the at the point of the 10 a.m. open, let me actually make this so you can see it. Like, dude, I'm entering at the 10 a.m. opens at literally the low of the day. So I'm not gonna sell in the discount of the range. It's already quite a large range. So to me, I just view this as me missing the move. So I'll just stop for the day. A lot of times you're either going to like retrace or just consolidate or like just the daily range is going to be kind of exhausted. So it's kind of hard to anticipate. So I don't really trade that. I want to be in around the opening price of the day candle, pretty much. But I traded RTY on Friday. Similar framework, but you look here. See, I'm entering a more so around the daily open. When I look here, the daily range hasn't really expanded yet. So this is when I look for a continuation in New York be more probable. Because if we're not going to take out the previous high, probably going to take out the previous low, right? We took all these highs the previous day. We very rarely ever inside bar. This is a super large range day, but you see how I'm actually trading away from a manipulation. I can't, like, when I open up freaking NQ, like, there's no protected high to trade away from, probably. Like, I highly doubt it. Yeah, it just opens up here, like, maybe this high, but yeah, not something. Yeah, like 6 a.m. power 3 is cool, probably. Yeah, it's a lot better. Um, oh, I didn't even see this actually. It's actually pretty fire. So you have 2 a.m. Um, you know, validating sort of block. And then you also have that small daily opposing run, which is fine. And I wouldn't really expect price to come way up here at this point. This is kind of probably like, let me go to 7. Yeah, like this is a kind of like the AM trades kind of logic for you would look for the 8 a.m. 7-hour candle to expand, but I don't use that necessarily. But yeah, you have this open high. And notice how we haven't reached an objective yet at this point. You still have this to do a trade to. So that's why you can actually trade this fair value gap or something. But I'm not at the charts at that time. It's pretty valid. But at the point of like 9:30, I think. 9:30. Yeah, like 9:30 is already expanding, so it's hard to get on side of that. It's a continuation. So if you don't get involved up here before 9:30, it's hard to get in, my opinion. How much would you risk if you have to? Oh yeah, so I do trade 50Ks, and I risk like 300 to 400 around there. Half the cost. You're crazy, bro. What's your win ratio for trading every day? Like my win rate, or my day win percentage, or whatever you call it. My win rate is like probably like 65 or something. Sometimes better. I'm not gonna lie, my day win percent is like pretty freaking high. It's like pretty freaking high. But that's just because you like just have to make $200 on a top step to hit a trading day. Sometimes I just do that because I don't copy trade because um, I don't have top step X. Next year I'm gonna try to copy trade, but so I have to trade. Sometimes I have to scalp to hit a trading day just to do it. Yeah, I have like a bunch of back tests. Like if we look here, I don't know if you guys can see my screen, but yeah, like this is it. Not a lot of trades, but 37, 2.5 R. My average R is like 2 to 3. Um, like 65% win rate here. Uh, this is only 13 trades, but 2.5 R again, 70%. I have one of these is like a lot of trades, yeah. 430 trades, almost 3R, 66%. So it's like in that area, like 60, 70. Here, 2 point, this is not a lot of trades, but you like 63, something like that. Honestly, if you can get like a 2 to 3R above 50% win rate, you'll do really good. Then at that point, it's just about like refining. Because if you can achieve a 50% rate, you can achieve a 70% rate. You just have to be more selective of FX Replay as a software. Yeah, I did post the RTY trade, I think. Sure. That's right here. Dude, how long is the stream? Holy moly, 2 hours. Bro, it's one ticket profit constant trading. Where can you learn from me? It's in the lens. In T trades and AM trades course. I'm like like an educator in there. If you look here, there's like 3. I don't know what you want to call us, bro, like helpers or something in there. But I basically teach my system. I just started though, like 2 weeks ago. Leaked version of what? Your UC, what RR? What do you mean? What are? It would be the same. I have the same approach on every single market. But if I'm gonna trade Forex, you're gonna have a lot more London reversals. A lot more. I trade indices, you're gonna have a lot more New York reversals because of the equities open. It's that New York volatility. So it's just a bit different, like the same thing. I want to see manipulation below day, but you're gonna refer to London and Asia. Like let me give you an example here. Okay, this is a good example. Let me go to the daily chart. Oh, I already went over this example, but you're kind of trading within the weekly logic here, where Monday, Tuesday consolidate. Oh, frick. So you have Monday at this point of this Wednesday or Thursday manipulation. You have just Monday high and low of the week, and then we take out Monday's low. But then you want to trade back to Monday's high because there's no established high up there. And then we form this SMT here. So at this point, you're trading a Friday open, low, high, close. Even though it's within a higher consolidation. The confirmation of this is two things. The way this kind of forms and also the way the sessions also form it. So you see here how we open low first. That's one confirmation to a bullish day. The next one would be this small closing run. And the third one is Asia consolidation. So remember how I want to trade it from manipulation? Here's that manipulation, right? You trade into it, very next candle we trade away. And you validate this as an order block. So at the same time, let's say it's literally the same thing as what I do, is because when we manipulate here, you're gonna look, is there an established high today? No. It's just failure swings. So that adds to the narrative, right? So that's all that is. I go to another day. And again, it doesn't happen every day. It most definitely doesn't. This day here, a lot of times you're gonna have Asia low today too. So if you're gonna frame a reversal day, okay, right. The reason why you can trade this day is because you're opening near this low. And I think there's an S&T here. Yeah, there's. Do you see this S&T here as well? Yeah, so you could trade this day back to the range because we have these, you know, 2 days of expansion. This is a TJF, by the way, where we have, classic sell week, pretty large range week. So you can trade back to the range on Friday. Um, and the confirmation of this is we open low first, right? And then we're getting active direction. Here's your confirmation, but I think I think this was stronger maybe. Oh, this is way cleaner, which is fire. This consolidation, we manipulate, then we expand. This is fire. These opposing candles, look to the opposing side of the curve. We're displacing, closing over sell side P rays, using them as support, right? I think we have news here too. Yeah, we have news. I don't think it does anything significant. Yeah, it doesn't really do shit, to be honest. But yeah, it's kind of clean. Pretty much just manipulation of a range low, distribution to the range high. This would be your draw, the previous high, which is a daily fair value gap. So it's just external to internal here. If I look at any of these days here, so we have Tuesday manipulation. I want to frame an open high local. So notice how it goes open high first, right? Now, ideally, for me, ideally, this is SMT right here, bro. That would be so clean. Previous is high. That is not the previous high though. That's 12 o'clock. 12 p.m. Okay, so that's weird. 12 p.m. over here. Okay, no, there's no SMT there, but it's still like valid. But I mean, it's just consolidation, really. The price is consolidating. It's still valid, right? You have this opposing candle here. The thing when I don't have like established high today, there needs to be some sort of manipulation, like away from this. Basically, the distribution away from this high needs to be some sort of protected high. That's how I kind of view it. So there would be need to be an S&P somewhere, which I think it's right here, 9 a.m. Yeah, it's right here. This is like FOMC, yeah, or something. You form this SMT prior to the news event, so the confirmation to a manipulation prior to a news event is when the news event expands away. I think this is on NQ as well. Like literally the same thing happened. Yeah, pretty sure ES took out this high prior to news event. Yeah, it did. It was freaking melt. I don't really trade these news events, but oh my god, if I did, that'd be so much money. Holy shit. Yeah, possible. Show. Bro, can I trade only using that? Oh, hell no. I don't recommend it, bro. I never recommend that. Like only looking at like 4 hour or the 1 hour for higher time frame. Like it, I don't know why you would want to do that. You're literally just hindering yourself. I promise you. You could though, if you're like a really, really low RR trader, you could. But you can't if you're trying to go higher R, I'm telling you can't do that. Because you need to know where the daily candle is going. Trying to predict a large move, you need to use a higher time frame. So if I were to focus on primarily, say, 1 or 2 trades per day, what is good risk management for weekly percent target? Oh, I don't have a target for that, honestly. I wouldn't set targets because then you might force trades to hit that goal. Um, I would just say max 2 losses a day, and I would generally stop trading. I would generally stop trading after your first win. You don't want to give that back. Um, you know, I would just do that. We keep it really simple and have 2R at least. So basically, your worst days can't outperform your best days. But I mean, if you're having a decent a decent amount of trades per week and a decent win rate, it's just gonna naturally you're gonna do fine. Like there's no point of stopping. Like if you hit 3% for the week or something, there's no point of stopping if there's a trade. You know what I'm saying? So that's why I'm saying it's like not really a thing that you I don't think it's helpful. Bro, show the indicators you're using. All right. So for session indicators is ICT full zone and pivots right here by TFO. Uh, this one can you link this one TWX? This is the one that shows the higher time frame candles and the separators. That's the only candles you need. If you want the economic count, this is a really cool indicator by 2 degrees. It's just called news by 2 degrees. It's fire. And then this is the T-Trades fractal model indicator. This is just a watermark. You know. Wednesday, Woody short. Uh, Wednesday. This is Wednesday. tripping? Daily open Wednesday. I don't remember Wednesday doing that. Oh, Wednesday. There was no Wednesday candle though, right? Yeah, I don't know what you're talking about. What day is this, by the way? What's the FX replay? Okay, like you could trade. I don't know the narrative here though. Like, but if this is the daily open, see how it went open low first? I don't really like that, honestly. Not generally what you want to see for a bearish day, but you would just adjust your target rate. If you're going to fade this kind of candle, so look at the daily open. It opens right here. The wick is small. That's cool. You can trade this, especially if it's like 930 manipulation or some shit. This high right here, though, is kind of irrelevant to me. Like, I actually more so look at, for manipulation for the higher low of the day, I don't really look so much left, especially when it's something like this. Like in that scenario, it's just a bunch of like failure swings almost. And like you're just counting on one of these, like one of these random ones to be the manipulation. Um, I more so look at like this. Like, I want to see an intraday. Let's say the daily opens here. I'm more so looking at more so current price action. So let's say this hourly high. I'm more so looking at this as the manipulation, not so much this, you know, unless this is if this is a range. So let's say range high to the left, range low. We're just consolidating, then yeah, I'll refer to this. But if it's a bunch of just random highs, like price comes up here and sweeps this random high to the left, like I don't really care. Does that make sense? Anyway? Like, look here. This is a high to the left or a low to the left, but it's the only relevant low to the left. It's a range, pretty much. So I'm going to use this. This is the only area below the deform. Literally the only area. If it didn't manipulate this low, I wouldn't trade this day. If you look here, I'm never going to look here at this low, right? I'm going to look more intraday. See that? Here, I'm never trading this day, by the way, because there's no established low. But try to find an example for you. Here, it could be valid, right? Because we have a range. High to low. It's just the difference here. But if it's swept this high, I would not give a I would actually, I don't want it to be this high because this high is so close to these highs that it's just a failure swing. Like, it's actually irrelevant. See that? You know what I mean by that? But ideally, there would be like something like this. Like that. That's what I kind of like to see, but let's see. Try to find another example. Here's a good example. I remember this day here. This is a low to the left or a high to the left, but you see how it's spaced out from this high? So it's not even a failure swing. It's just a range of low to high. So it's like a bit different, you know. This one here, an SMT low. This one here is good though, right here. Wait, no, it's not good. This is also fine. It's really ugly. Range high low. I'm trying to find an example of like low to the left that I don't give a shit about. Can't find any though. Okay. Like I'm never okay. So like I'm not really gonna use this high example. I'm not gonna use this low or this low. Yeah, like this is way to the left, right? This is intraday right here. If I pull it right here. So we open low first into this low. I'm not. First off, it doesn't even make sense to even look for a reverse off here because this candle not it doesn't support that narrative. But see how it's like close proximity lows essentially. I don't know how to explain it. But trying to find a good example. Do we try to find one? Hmm. Uh, Bro, I cannot find an example. Okay, maybe. Like okay, so you see all these lows? None of these are relevant at all. Like these lows right here. This is the relevant low because these are all failure swings. Right. So we form an SMT here, by the way, with the related asset and the pre expands. Yeah, none of these would be relevant here. I'm not gonna trade with failure swings. But okay, so honestly, if this low was not here, you see this lower here? If this low was not here, I wouldn't care about this sweep. I wouldn't care, honestly. Um, but the fact that this low is here, it's a close proximity, um, is why I would want this, or what I would consider it. Like right here, like this low, it's just not significant, to be honest with you. Like I don't know, bro. I don't know how to explain. Like I should have a feel for it, I guess. I don't know. But if you look most of the time, it's more intraday stuff that forms. Like if you look right here, these are intraday highs. So we open low, come back, manipulate the data range, expand lower. There's like a SMT here. That'd be nice. So you see this SMT here, the New York session high. So you have manipulation at the high today. And that small opposing run. But yeah, this is all intraday. Like none of these lows. I don't give a fuck about any of these lows right here. Only this one. You know what I'm saying? Okay, a lot of these. This is probably a good example, bro. It's probably a really good example. So you see when you have like all these highs, I'm never really going to trust like any of these highs. I would want to see like a very high get taken, if that makes sense. So like, I'm never going to care about this low. Like none of these matter to me. Okay, this is a good example, right? It's just a bunch of failure swings here. They don't actually matter. Like I'm actually looking for a manipulation to then trade to those highs. So I would be looking right here. This is a relevant time in a way. Is this like news possible? Okay, we have news at 13:55. We make an opposing run at 13:55 here, and then if you look at the high today, we have no established high. It's just fair, so very. So I could possibly trade this candle higher, but I would never trade this because this opposing run on the 1400 candle is really hard. But this is like a good example of like I would not trade away from these highs essentially unless we manipulate the very high, because at that point that would create the high of the day. Because the high of the day at this point is just Asia session highs. But if we did something like this, then I would trade away from it. Like we swept out all the highs. I guess that's a decent example. I don't really know how to explain it. This might be a a decent example here. So look here. See how this is a fair swing this high? Like price is not going to reverse from here, like all the way down here. It's irrelevant. It's kind of like irrelevant. It's just a fair swing. So this is just generating. Like I look at this like just more generated buy side, and then we sweep this range low. You essentially have a range from high to low. All of these are fair swings as well, pretty much. Does that make sense? Kind of. I don't know. You just have to get like used to it. It's kind of hard to make mechanical. It's like really hard. Oh yeah, I see it too. Oh, it's a back test from 2021. Yeah, I don't have enough like information, but what I can tell you, like I said, I don't really care about this manipulation here. It's kind of irrelevant. Not gonna lie. A lot of times is you're gonna have fair swings like this, bro. And one of those highs is gonna be a fair value gap high. If I show you here, maybe like right here, bro. Maybe this is a good example. Not really, to be honest, but it's like, I don't know, it's not an example, but I'm trying to show you an example of there's a bunch of fair swings and an expansion leg, and it's just a fair value gap high or low. Maybe like right here. Maybe right here. So you're gonna have like some sort of like fair swings in here, probably. All right, not really, to be honest. Try and find a good example, bro. This guy right here, but I don't think it's gonna be good. All right, let's just pretend like, bro. Let's just pretend like fair swing right here, fair swing here. Pretend there's like another one right here, or some shit. I don't know, maybe like 30-minute or something. There's one. Yeah, I don't know. 15-minute. It's really not, but you get my point, right? There's a bunch of fair swings to the left, but it's also like an expansion leg. There's like, which one do I use? Just find the fair value gap. Fair value gap. Higher time frame. Pretty much. That's all fair value gaps are. Highs and lows on lower time frame. That would be the advice there. Trying to find a good example though, bro. Maybe almost like right here, dude. This one might be a good example actually. You just use this new week opening gap or this new day opening gap. But it's really not a good example because this gap is not a high or low. It doesn't really work like that, but you know, you manipulate into it, I guess you could say. Yeah, that's really not an example. My bad. Yeah. Gotta find a pretty example. Yeah. Honestly, might not be able to find. Oh, maybe here. Maybe here. Not really, bro. I have a fair swing here, but maybe here. Kinda. I mean, fair swing here, fair swing here. But it's just a fair value gap, right? Like whenever you have a higher low that you want to sweep out, if it's just a fair value gap higher low, usually a better. But also maybe right here. What I'm trying to look for is basically like a bunch of failure swings. Basically like candles that are close to each other. Let me check find one. 'Cause that's where the original consolidation lies. Uh, kind of like right here, for example, you have a fair value gap, but you also have like a previous candle's low before it. So what this is on lower time frame It's just a residual consolidation generally. Like if I go here, it's usually just like a consolidation. Sometimes it's cleaner, but when they're really close proximity to each other, that's when you see it really clear. I try to find one for you. Okay, so like you see here, this fair value gap. See all this low resistance stuff? So you look here, this is like an MMXM almost, right? You have the original consolidation above that fair value gap, a bunch of accumulation stages and whatnot. And then we manipulate the low, so smart money reversal. And you just get like distribution stages to the consolidation high. So it's just a fair value gap pretty much. So these little highs right here, that's what I was kind of looking for. Um, but I'm trying to find one. Here's a good one, I think. There's another one, right? On a lower time frame, bunch of fair swings. So what I'm saying here is like all these little lows, this low, they're irrelevant. They're absolutely irrelevant. This is the one that we pay attention to. We want to see that get taken out. And usually that's a consolidation or a fair value gap. Right, so see this reverse consolidation or whatnot? To expand into it. You can use that as a reversal point. Does that make sense kind of? So if you ever see these little stacked highs before a fair value gap, it's usually the reverse consolidation in MXM. So if I was to show you this, maybe on a different time frame, see these highs right here? We did mitigate this fair value gap, but barely, barely. This is what you want to see. Look at like a 5-hour chart, you might look different. 6-hour, that 1 hour. Brick, whoops. On some time frames, it's just gonna be a solid fair value gap, probably. Try to look for it, dude. Here it is. 9 hour. You see what I'm talking about? Like you can still trade that. I can still trade that just off the 4-hour logic. I mean, it's barely filled. This fair value is barely filled. But on a higher time frame, it's just gonna be a solid fair value gap somewhere. Here's another good example. You have a fair value gap, but you also have like low resistance, before it. So if we like take out this high, for example, on a quarterly asset, to trade back into this range is like very high probable. So I don't know if we do. If we do, you see that SMT? This would add to the narrative for price to at least trade in this low, at least, or not. But we eventually do it the next day. You'd pretty much look for the same thing. Wait, what the fuck? Oh wait, we did. It just glitched. That's weird. Y'all see that? The fuck? We did trade into this. Weird. On ES, we didn't though. That was weird. This is probably. I bet there's S&T here. Probably, if I had to guess. Ideally. Oh, what, 1800 low? Actually not. 1800 low. YM. There's YM, but I don't really count that. Yeah, I like to see this on the daily time frame, guys. For draw. On liquidity. So let's look for that shit. So you see this here. See this little swing point right here? This little low? above this fair value gap on a 4-hour chart to the swing point low. If I go to like the daily. Okay, look right here. These fair value gap. If this high is in close proximity here, it's a fair swing. So if I go to like the 4-hour or the hourly chart, this is the so-called residual consolidation or whatever you call it. That's what I mean by that. But this right here, this fair value gap here, see these failure swings right here? That's what I like to see. This is a consolidation. So that's what I'm talking about. Sometimes it's like really obvious though. I bet right here, I bet within this range right here, there's probably a fair value gap on some time frame. This is maybe the fair value gap high. But it's gonna be like a higher time frame. It's gonna be like a 12-hour chart or some shit. Not quite. Maybe not actually. Okay, pretty close, dude. Did you see that? Too much failure swings. This would be the original consolidation lever. And then to trade back into that, right, we have a manipulation to trade back to the range with failure swings at the lows. We sweep again. So why do we sweep again? Is because when we sweep this first high out, what do? We just consolidate. So if you've seen my video on this, how to frame reversal, if we trade into a high, a possible reversal point, and we do not actually reverse, we don't expand away, we consolidate, we're going to refer to this high as the reversal point. And if you look inside of here, probably 930. Yeah. You see how the previous 2 sessions consolidate? The open high, manipulation to high day. Look for SMT here. See that SMT? So like this is my complete model right here, basically. Literally perfect. Like actually so clean. This is when you full for right here. I'm just kidding. Your stop loss, the bodies, then trade to these levels and stuff. That's actually a really good example right there. Yeah, if you what time frame is this? 1 hour. Maybe there's a fair value gap somewhere in this leg, but that's how it's kind of going. Kind of like, yeah, I feel like ever. Fair. Thanks. Yeah, that is fair. Can set expectations, count growth. Yeah, exactly. What about having multiple prop firms accounts and reducing the risk by creating one? Yeah, that's cool. What is best practice with regard to record drawing prop firms? Yeah, I would build I would build a buffer because, yeah, I actually do this too, though. Like that recent challenge that I did on T Trades challenge, my most recent withdrawal was it wasn't that much. I only built the account to about 4%, so it was like $2,000. So I withdrew 1,000 just because, right? And I built it up again to back to like 2,100. But this next payout on it, I'm going to wait till I'm probably at like 3K, 4K. Because when you withdraw, like one time, you can't let it go to, you can't let the account go to $0. So basically the account balance. Because when you start a live account, it's not at 50K. It actually starts at $0. So whatever withdrawal you make, you can't let it go back to basically $0 or you lose the account. So it is good to do a buffer. So like I wouldn't withdraw at like 1,000 because if you withdraw 1,000, you withdraw like $5, you'd only get $500 because you can only withdraw half. You're so close to that zero that you lose the account really easily. At least I think. Because, well, hold on. I don't know. I have to keep it actually, because I've never withdrawn that early. I think it is, bro. I think as soon as you withdraw, bro, any amount, I think you can't let it go to zero. I'm pretty sure. I could be wrong, though, honestly, but I actually could be wrong. But the trailing drawdown stops at 3K. So that's why you want to build that buffer as well. Oh yeah, no problem. Do I trade Forex? No, I don't trade Forex. Ah, and live stream. Oh yeah, I probably should shut it off. Or I should stop. Bro, I started the live stream at 9:30. It's 12 o'clock. Like 2 hours and 30 minutes. We're probably indexing. Yeah, that's crazy. Only because it's a free chat of waiting people. And you get your version. Oh yeah, manipulation. Yeah. Oh, are you asking T-Trades how to find the journal liquidity, or are you asking me? Oh, yeah, in the form of session highs. If you watch the stream again, you're gonna see how I find it pretty easy. Journal liquidity is actually pretty simple. What's up, Miles? Yeah, I'm probably gonna end it though, guys, because holy shit. Yeah, it's recorded. So TWX reports it. He's posted on his YouTube. Alright, yeah, guys. I will catch you all probably later. Why do I have all these X? I'll probably post it in my channel. So look right here. Where the hell is my channel, dude? Look right here in a couple minutes or so. I'll post it in here. You can watch it that way. Oh, I don't have the PDFs for it. Holy shit. That's an essay right there. That is an essay. Say. Alright, I'm gonna end this shit. Alright, I'll catch y'all later, Bruce.